Hi to everybody. Good morning to everybody. Let me open our yearly IFA conference and let me greet all the participants of this session. I would like to wish our session, not only session, but all our conference great success and wish all the participants interesting discussions. I see that many of you are so enthusiastic, and I'm sure you will get great pleasure of exchanging your professional views. I understand that this is the first time our IFA conference take part in this format. This format is very unusual to us, but it doesn't prevent from professional connections. So I wish you good discussions and have a good day. Thank you very much, and see you then.
Hello, everyone. I'm Viktor Machechin. I'm General Secretary of IFA Russia, and I'm happy to open our conference, Annual Eurasian Tax Week. It is a number of events, and it is a combination of IFA, Russian Chamber of Tax Consultants, and also Finance University. These three main bodies, they are doing their tax events, and physically I'm at the Conference of Russian Tax Consultants at the moment. So I wish you good discussions, and see you during this week at the different sessions.
Thanks very much, Victor. Thanks, Irina, for the kind introduction. My name is Sanjay Iyer, and I'll be the chair of today's panel. The panel today is entitled International Tax Policy Around the Globe. We have 6 great speakers today who are going to firstly introduce the topic and then discuss this issue from their own country's perspectives, namely Russia, China, Finland, Ukraine, and Bulgaria. And if we have time, I also discuss about Singapore. Before we start, let me introduce the panel. Please excuse if I have not said any of these names in their pure local senses, but I've tried my best. So firstly, we're going to have Gennady Kamishnikov, tax partner of Deloitte Russia, who's going to explain this topic from a helicopter view perspective. Then Vladimir Tyutyurukov, associate professor, HSE University in Russia, will give the Russian perspective. Tianyong Hu, associate professor, Renmin University of China, will discuss China perspective. I have to give special thanks to him because he's currently in California, and it's currently half an hour past midnight for him, or even later probably by now. So I really appreciate his time in joining. We have Mika Nisinen, senior lecturer from the University of Eastern Finland, who will discuss obviously this topic from a Finnish perspective. Svetlana Musienko, partner, Sayenko Karenko, Ukraine, will talk the Ukrainian perspective. And then finally, Valentin Savov, partner of Savov and Partners in Bulgaria, will discuss Bulgaria. And then finally, depending on how we do it time, I'll probably also discuss the Singapore perspective. So Gennady, I'll pass this over to you, and good luck to everyone.
Thank you, Sanjay. I'm really looking forward to this event. I think we'll have an interesting discussion with all this pandemic stuff. I think it's good for us to be able to connect like we're doing now, because you actually do talk to many more people and really around the globe. It's without the hustle of traveling. So whatever anyone says, I enjoyed the last year, and from that perspective, and that was fun. And from speaking from Deloitte, also we're proud to partner with the week, as we're supporting the week technically, and the team who runs this audio transmission is our team. We've done a lot of the streamings in the last 10 months, hundreds of them. And I think they've showed the interest in tax matters. We had dozens of thousands of people listen to tax discussions, which you would not normally expect that would be happening. So I hope that the discussion today is also of great interest to the audience. And so what we wanted to talk about in the starting point was obviously the international trends and how they evolve and how they then get reflected in the local national legislation, particularly of the countries which we represent. As there are two speakers from Russia, I'm going to be followed by Vladimir Tuterogov, who used to be a colleague of ours, of mine, and now is an esteemed professor at the High School of Economics, one of the best universities of Russia. I won't talk about Russia. What I wanted to talk about is this theme and subject which I'm a big fan of. It is about the changes in the world and how they affect the tax environment. And everyone understands that obviously in the last 10 years, technological changes have brought a lot of changes to our lives, and tax could not stand aside. And others will talk about, other speakers on the panel will talk about pillars and the OECD initiatives. I wanted to talk about the two C's which I witness and which I always see in the worldwide tax systems. The first C stands for cooperation. And this is what we will talk about a lot. It is the OECD activity and the multilateral work of the countries, where countries are trying to get aligned to combat whatever they want to combat, and fight against mutual enemies, maybe, or designing their unified international policies. But interestingly enough, there is another C which we started talking about some 15 years ago, but we sort of stopped talking about in these international events. And this is the C which stands for international tax competition. So it is the competition that's what I really want to talk about. I think this phenomenon has not disappeared. And we did start talking about that some 15 years ago. Then OECD went into play and said, okay, let's coordinate and let's work together. And we stopped using this word, the word of the competition. The truth is, though, that it hasn't gone anywhere. If you look at what's happening in the world, there is a balance. It's like checks and balances. Countries cooperate and they talk openly about that. And then they compete and they don't talk about that. And whenever we look at what's happening in your country and in the rest of the world, we need to think through this competition and cooperation. There are tons of examples of when countries compete and they do not necessarily openly advertise what they've done. But if you just look around, and all of you, my esteemed panel colleagues, will be able to come up with these examples, all of you can come up with them. If you think of what has been in the news over the last couple of weeks, there is a heated discussion between Luxembourg and the EU on Luxembourgish tax policies. Why? Because in all truthfulness, there is competition within the EU and between the countries of the European Union. If you think of Russia, and Vladimir will talk more to that, but obviously Russia has done a few things on its own. We're starting revising the double tax treaties with quite a few countries. That's not a sign of cooperation or a particular agreement with anyone. It's not necessarily coordinated. Okay, discussions are happening, but I think that is a great example of competition in international sense. If you then think about digital taxation and how that has evolved in parallel to the pillars discussion, that's a huge other example of competitions. And Russia has also started talking about that with thinking about making these unicorns register in Russia for tax purposes, starting to pay corporate taxes. This may be the approach that Russia will take. And that will be another example of competition. What else? We have huge pressure exercised here in Russia on the individual taxpayers now, wealthy ones. The rates are going up. There's push for disclosure of information on bank accounts and controlled foreign corporations. That comes from the exchange of information, which was the result of the international tax cooperation. But now Russia will compete with other countries for this wealth of these people, trying to levy taxes on that. Even if you look at the competition, by the way, is multi-layer. As I've given you an example of competition within the EU, I've given you examples of competition in Russia, but then you also have groups of countries competing with other groups of countries. Think of the European carbon tax. That's competition of EU against the neighbors. If you take it brutally, that's how you could call it. So in my view, it's always important when we're discussing the international tax not to forget that phenomenon. And through that, I think the two C's, cooperation and competition, everything can be explained. This is why countries will continue to cooperate, they will and negotiate, but they will also continue to compete. We will always have work to do because we will know and we will have to know the international cooperation and competition trends until, and you may ask, when does that finish? I mean, never, or when we have a total convergence of the society. Maybe that will come through the answer to Stephen Hawking's questions or question of the theory of everything. Whenever we converge as the population of this world with the computers or not, we will see. I don't know whether we'll witness that, but for now, this is what I wanted to start this discussion with. And with that, Sanjay, I want to pass the word back to you.
Sure, perfect. No, so I think it's an excellent introduction. I think the question someone once raised in a conference to me, a senior advocate in India, said, maybe the answer is corporations and individuals just pay one global tax and then the countries themselves fight amongst themselves for the income, and leave the taxpayers out of it, out of the whole thing. I don't know. Anyway, so Vladimir, please go ahead with Russia and then we can go from there. Thank you.
Thank you, Sanjay. Good morning or day to all attendees of the conference, and following the words of Gennady, who indeed was my esteemed colleague back in the tax consulting days, I'd like to dig more into Russian perspective of international tax policy. And in last year, Russia moved towards three issues, and the probably most notorious of them is a renegotiation of double tax treaties with several countries. Then there was a quite interesting development of flat tax rate for controlled foreign companies, a special tax regime for Russian beneficiaries of such. And there is one latest development. The news leaked about a week ago about so-called digital residence for foreign IT companies. So more to the point. Last March, just 3 days less than a year from now, President of Russia made the first address to the nation because of COVID pandemic. And in this address, he also mentioned that the country must renegotiate double tax treaties so that dividends and interests, which, according to his words, have been taxed at 2 or 3% effective tax rate, should be taxed at a full 15%, which is aligned with the local tax rate established in Russian tax code. There was discussion among tax consultants and corporations on how to deal with this idea and which countries will be subject to such renegotiations. Ultimately, Russian Ministry of Finance announced 4 first countries: Cyprus, Luxembourg, Malta, and the Netherlands. And last month, Switzerland was also on the list. So during 2020, there have been successful negotiations with Cyprus, Luxembourg, and Malta, so that general tax rate on interest and dividends went up to 15%, though some exemptions and beneficial tax rate of 5% are still available. Nothing is that bad as it could have been. The negotiations with the Netherlands are still pending. Latest news are that the Netherlands are still stubborn and don't want to opt for Russian terms. So the future months will show their answer. As for other countries, there have been a letter from the Minister of Finance that suggested that no double tax treaties with strategic partners of Russia will be renegotiated. And 4 countries were named there: China, France, Germany, and Italy. Most of holding jurisdictions are still within the risky territory. To summarize the beneficial terms, the dividends distributed by the public companies are still subject to 5% in all 3 countries where negotiations have been a success. Also, the dividends paid out by central banks, insurance companies, pension funds, plus there are some benefits on interest for the said companies as well. All of that apparently goes according with the principal purpose test. So if there is a real activity from the shareholders, so there still will be some benefits. About lump sum tax regime for controlled foreign companies, that's quite an interesting regime, and Gennady earlier told me that it's been of interest for our foreign colleagues. Basically, the idea is this: if an individual who is a Russian tax resident wants doesn't want to disclose much of information about controlled foreign companies under his control, he or she may just decide to report the nominal, or rather imputed amount of about 34 million Russian rubles, and pay the lump sum tax of 5 million rubles, and that's it. Well, such taxpayer still need to report that he or she is like a controlling a person of CFCs, but basically that's it. And the officials of Federal Tax Service of Russia also supported this, that their companies better be prepare their annual financial statements, but it is not yet necessary to report them. It would be appropriate later if the company, if such a Russian taxpayer would opt for a general regime and then decide to use the losses of CFCs to offset against some profits. And at this point, their financial statements would be necessary. But before that, well, so far the regime looks really relaxed. And 5 million Russian rubles, that is way below, say, well, it's about $100,000 US dollars, I believe.
About $90,000 US, 5 million rubles.
Yeah, so yeah, thank you, Sanjay. So their payment might be very low for the CFCs where profits are really, really big. Still, their tax authorities and tax consultants remind that there are some benefits under general CFC regime. But okay, this lump sum might be also interesting experience. And their last development, that is digital residence for foreign IT companies. All of that is within the scope of ideas expressed by OECD in Pillar 1 and, well, in Pillar 1. Technically, the Russian IT companies complained a lot about unequal treatment of them and their foreign competitors, so that foreign IT companies are not obliged to withhold personal income tax from payment to individuals. If there are some Russian residents among such individuals, they don't pay social security contributions on their Russian contractors, like Russian individual contractors, and so on. And ultimately, they also don't pay value-added tax in Russia in many cases. So based on these ideas, Russian government is going to introduce a so-called digital presence, generally for legal purposes, but also doubling for tax purposes, so that so to say, land foreign IT companies in Russia, if they do have a digital presence in Russia, so that they not only report but also pay taxes here. So these are most important Russian developments in international tax landscape so far. And now I'm giving a word back to Sanjay, and we'll see what other countries would like to share here as well. So, thank you.
Two questions for me, Vladimir, for you. Do you think this 5 million threshold will be increased over time, that now it's, or do you think they'll keep it where it is?
Yes, this question is highly discussed by professional community. So far, Federal Tax Service suggests that there will be no revision, but that might be for the nearest year or so, and later, well, we'll see.
And last question for me, do you think that with all these changes that slowly one day there may be no more tax planning opportunities, that basically it's sort of dead, that we just follow and that's done?
Mm-hmm. I believe there still will be tax planning, but in a totally different manner than we know it now. Right now, with the developments of social networks, with digitalization of tax control, with exchange of information among tax authorities, there is still less and less of asymmetry of information, so that everyone knows everything about everyone. Well, that's where we are heading so far. So, in my opinion, the tax planning will remain, but in the area we know currently as rulings, so that tax authorities and taxpayers would better negotiate how to structure their tax system, and so redistribute the finance among companies and public sector more efficiently. But based on Russian issues with this, I would rather add that budget transparency would be also a good idea to finalize the picture so that the whole system would work more efficiently.
Perfect. Thank you for that excellent answer. Tianliang, do you want to go ahead now with China? Thank you.
Thank you, Sanjay. My name is Tianliang, and thanks so much for inviting me to this IFA Russian conference. I'm very delighted to be able to share with fellow experts on what I have observed in the past few years regarding the Chinese tax system, the legal environment for international tax policies in China. So to lay a little bit of background here is that we all know that the world is full of transition right now. The point here is, we're in the midst of the COVID-19 pandemic and spikes of harsher surges of infections in many places of the world. So the global economy is in quite bad shape. In many ways of statistics under the fears, angers, distresses, or distractions instigated by the pandemic. So companies, especially multinational companies and employers, such as governmental entities and NGOs, they have displayed many flexibilities in terms of tax policies and tax incentives in fighting with the pandemic and the hurtful sways therefrom. In terms of the tax and business settings in China, which for now is the second largest economy in the world, the fact is that the Chinese companies have been beneficiaries of the globalized development of economy, the free flow of international capital, the fast structuring of supply chains, the fashion of the administration on regulative governance, and cross-border move of labor capital and human resources, especially after China got access into the WTO as a key member country in the nature of a developing state. Therefore, any discussion of Chinese tax system, international tax policies, international legal environment shall be inclusive and many business orientations and fashions internationally should be countered in. I want to mention a few words regarding the latest development of the domestic policies in China. In August 2020, China's central government decided that in the foreseeable years ahead, China will gradually carry out a development strategy of dual circulation, means double circulation, which means according to the official release of the government, China should rely on both robust cycle of domestic demand and innovation as the main driver of the economy, while maintaining foreign markets and investor as a second engine of growth. So apparently, such dual circulation strategy is deliberated based on comprehensive review and analysis to steer Chinese economy. So this strategy envisions a new balanced model that is different from prior global integration and participation, which happened in the past 40 years. And it returns in embracing domestic reliance and domestic demand. For instance, the Chinese government is trying every effort to entail new integration that values both internationalization and domestic self-sufficiency. While benefiting from international capital, finance, and technology transfer, the Chinese government simultaneously bolsters domestic capacities to avoid over-reliance on foreign capital, foreign technologies, and to avoid any uncertain results of international trade disputes. So this dual circulation model is what we are going to start, and also what we're going to be based on in terms of international tax policies. So mostly I will discuss very briefly on 4 aspects of international tax related issues regarding the Chinese tax regime. The first is the commitment to reforming in free trade areas and promoting the internationalization of the currency if at all possible. I mean, it would be so hard at this economic development scale to generate a whole big picture tax reform from the basics. So promoting the fiscal and tax system reform gradually through the establishment and the deepening reform of free trade areas or free trade zones should be an efficient measure for the tax system reform, which concerns about the international tax policy. We have the Shanghai International Trade Pilot Free Trade Zone established in September 2013. And we have the most recent Hainan Free Trade Zone or Free Trade Port, which was established in the past few years. So the goal is to liberalize investment, trade interest rates, and accelerate development of financial sectors. So the point here is there will be a lot of preferential customized tax incentives and a lot of tax holidays to be used for those free trade zones or free trade ports, such as the installments of certain assets, the export rebates, the exemptions of import tariffs, as well as certain extended tax holidays and the tax incentives for encouraging human resources to come over to those free trade zones to settle down for a few years or for many years to come. Simultaneously, there is a similar policy in the southern China, which is, we call it the Chinese version of the Great Bay Area in southern China, which includes Shenzhen and Hong Kong. The point here is the government wants to use geographical merits and Hong Kong's prominence as an international hub for financial services, international settlement, and supply chain management to increase those use. So therefore, there would be a lot of tax incentives to be designed to be innovative and to encourage free flow and full convertibility of capital denominated in Chinese currency. The second aspect I want to discuss is promoting a comprehensive carbon tax regime for the next decades to come. Actually, China, according to certain reports, is the world's largest emitter of carbon dioxide. It has promised to become the carbon neutral before 2060. I mean, 40 years to go, and to begin cutting its emissions within the next 10 years. I mean, it is China's first long-term climate goal, and it would require China to be tax neutral in the next decades. So the point here is how to use the tax system, borrowing international tax policies to curb harmful emissions, to restore the order of the tax neutrality. Therefore, there are a lot of there is a full comprehensive discussion about it, and there are a lot of issues regarding the the tax policies for that. But I would expect if you want to study Chinese tax, the carbon tax, the carbon neutrality related tax policies would be the focus for the next decades to research or to work on. The third point I want to discuss is how to use the tax system to advocate a charitable culture and the lowering income disparity. It is not so Chinese, the tax reform should not only aim to increase the economic benefits, but also aim to lower the income disparity and facilitate income redistribution to realize social equity. As many of you guys know, that there is no wealth transfer tax in China, and there's no inheritance tax in China. Therefore, there are many discussions about how to minimize the income disparity, how to lower the gap of the rich and the poor, if at all possible, to achieve social stability and to realize social equity. So there are a lot of, there should be China is doing a very good work over here, but there's still a lot of things. I think the government is trying very hard to catch up, is to have tax incentives for charitable donations, for the operations of NGO. There's a lot of things on that. The fourth point I want to discuss is China is gradually voicing out its own position for structuring international tax order and the related reforms. Given the background that China has risen as a key global economic development engine and player over the past decades, the point here is gradually China is escalating its role to be a power drive from a passive norm taker to be a rule maker or rule participant in sometimes. Therefore, for the past years, the Chinese government has been playing a more important role in designing and maintaining reasonable order in the international tax area. It is very evident, such as the BEPS, the G20 consensus, the Global Forum on Fiscal Transparency, the multilateral initiatives for international tax treaty negotiations, all those things. Even the MLI is only for OECD countries, but Chinese government is trying very hard to be part of it to advocate its position. So the point here is, China wants to desire a robust position, both as a capital importer of quality investment and to facilitate its reform for going overseas campaign, such as the recent Belt and Road initiatives. Therefore, the international tax policy is very important for the Chinese government to maintain the macroeconomic stability, the tax policy and the treaty positions, especially for some sensitive areas, such as capital gains, such as the renegotiations. A lot of the positions has been the position has been changed from a capital importer to be a capital exporter, from an intaker to an investor. Therefore, for the sake of efficiency, predictability of tax burden, compliance cost, tax avoidance, and the tax administration related areas, I think the international tax policy would see a very much improved function or roles in the next decades to come. Thank you so much, Sanjay. I hope I don't use, use 40 minutes.
Perfect. You're perfect in time, Ribish. I have one quick question before I know you probably want to go to sleep, so I'll keep it a short one.
No, I'm fine with that.
The reason I asked the question is in Singapore, this discussion has been happening a lot in terms of income inequality and obviously helping people in all sectors of society. What do you believe a wealth tax could come into China one day? Do you think it's a possibility?
Well, that's a good question, Sanjay. I mean, and also a little bit kind of sensitive to me to answer as well.
Oh, sure.
But I could answer, but I could answer from another point, because the wealth transfer tax or the inheritance tax is a big boost for maintaining the booming of the real estate market. So likely the government may, I mean, I'm not sure. I mean, there have been discussions all over, I mean, regarding the policies to see whether there will be specific types of tax, such as tax to be collected specifically on real estate, on housing properties, to neutralize the heavy burden of the investors, as well as to encourage the middle class, a huge middle class population, to maintain a quality life of work and social dignity. So that is, yeah, that is very important as well. Okay?
No, I completely agree. No, I didn't. No, I completely agree. It's a very tough question to ask in many countries, especially post-COVID. Obviously, always, but I very much appreciate your time, and hopefully you can get some sleep now. So appreciate
Okay,
it.
I will stay for another few minutes, and I will like go back. Otherwise,
Perfect.
you know, the
Thank you
case
very
will.
much.
Okay, thank you so much, Sanjay. I appreciate this opportunity to talk with you all. Stay in touch.
Thank you. Take care. Mika, do you want to now start on Finland?
Yep, thank you very much. And thank you, Sanjay. Thank you for having me and getting this invitation to this webinar. I was asked to share some of Finland's views on international tax policy. I hope that I will give you some ideas on that area. Maybe first some general viewpoints of the tax treaty issues. At the end of 2020, Finland have tax treaties with 75 countries, and obviously those new ones are being negotiated all the time. The international tax policy in Finland seems to be somewhat in the mode of what's next after BEPS. So after implementing that BEPS recommendation and MLI and also because in the European Union after EU anti-tax avoidance package, what will happen next? Of course, the digital tax question is one, and I will return that question a bit later. Concerning that tax treaty interpretation and tax avoidance, after that OECD 2007 model and the tax treaty law, there is that factual general anti-avoidance provision nowadays. And also in the European Union area, we have that European Union anti-tax avoidance directive that contains a somewhat similar provision. And both of those have that impact of the interpretation of that tax avoidance questions. However, it is important to remember that the general tax avoidance provision is not fundamentally changing the tax policy, because tax avoidance and evasion has been part of the tax treaties for centuries. So it's not a totally new area and not totally new era. However, it is clear that in future that tax avoidance will be interpreted on the basis of the same common definition. So that will and probably will harmonize that what is considered to be a tax avoidance and what is not. In Finnish tax treaty law and how we interpret that international than OECD those tax treaty issues, Finland seems to follow more or less those OECD interpretations, and the importance of those OECD interpretations in the OECD model has been confirmed in several Supreme Administrative Court decision in situation obviously where the Finnish tax treaty is based on that OECD model. However, it is important to remember that those new updates to the commentary can be used only if they don't change the purpose of the provision, but they are only supplement of the previous implementation. And this principle has also pointed out in the commentary of the OECD. With regard to transfer pricing area, we have, Finland have had some cases related to Finnish national transfer pricing provision, which would seem to limit that reclassification of the transaction in some extent, even if the OECD commentary or transfer pricing would make that a reclassification possible. So we have some minor differences concerning that national legislation and what those provision and OECD model and that interpretation of the OECD model is. Last past year that perspective is in tax treaty area have focused quite or stressed that anti-abuse issues and questions of on the anti-abuse issues. However, it is important to remember that taxpayers should always retain those benefits and rights of the tax treaty when it is not the question of the abuse. For example, those double taxations must be prevented, and ultimately the possibility is used to that mutual agreement procedure. With that, and after that multilateral agreement and EU directive, Finland has also implemented that arbitration procedure related to that mutual agreement procedure, and that's the ultimately last way to solve that dispute between states. And obviously, it is important element in preventing that international double taxation and taxation that is not within the tax treaty, those regulations. Concerning that MAP and mutual agreement procedure in European area, there are at the moment 3 alternatives forms to that mutual agreement procedure, because we have that European Union Dispute Resolution Directive, then we have that Union Arbitration Convention that concern those transfer pricing issues, and obviously that mutual agreement based on the tax treaties between Finland and other countries. So taxpayers need to choose which of those procedure it will start and which of those procedure is the best one. Mostly those are pretty much similar, but there are some differences concerning some time limits and maybe access to arbitration. So it is taxpayer must carefully consider which of those procedures will start and which of those will apply. Something about those MAP statistics and OECD MAP statistics from the OECD. OECD has published latest statistics from the year 2019, and in Finland the end inventory of those maps has slightly decreased in 2019. Start inventory at the beginning was that 2019 118, and the end inventory was 97, and 46 map cases were closed during 2019, and about half of those map cases are transfer pricing cases, and other cases are the rest of those, so individual and company cases concerning transfer pricing, not transfer pricing, but royalties and permanent establishment. I also saw those similar statistics from Russia. It would be interesting to hear some thoughts on those statistics of Russia, if someone knows that statistic better than me. Personally, I would encourage to monitoring those OECD statistics, because you can see how many those cases have resolved by the mutual agreement procedure, and also whether the consensus has also been reached between countries. So that statistics is pretty much interesting that OECD publish. Based on that statistic, it can be said that MAP is functioning in Finland, and it is possible to, and it's the one way to eliminate that double taxation contrary to that tax treaty. Perhaps the biggest challenge can be if another state for some reason does not or doesn't have resources to negotiate, or there is some other reason why the other country won't or will not want to have that mutual agreement procedure. From the MAP issue, I would like to say some words on that tax control and its targets. In Finland, tax control is increasingly based on the risk analysis. It is important to highlight that tax control and auditing should not only focus on ex post control, but instead more on ex ante control, if possible. This can be achieved through different kind of pre-activity, like pre-guidances, pre-discussions, and preliminary rulings prior to the time of the transaction takes place. And I believe that this area is expected, but also desirable to get more attention in future. How to try to find a common solution on tax issues beforehand, not afterwards. And one interesting area and one important area of that ex ante is that APA's advanced pricing agreements. And in Finland, those APAs, advanced pricing agreements, are possible, even there is no separate legislation regarding APAs in Finland. That APAs is based on the mutual agreement procedure laid down in tax treaties between other countries. Obviously, it depends, and it is important to know whether the other country and states consider that tax treaty APA is possible or not. That information on APAs and MAPs can be found in Finnish tax administration websites in English. So if that is interesting area you want to study more, I recommend to study those internet websites of those tax administration. One area that I want to also highlight is the reporting obligation policy nowadays. Especially in recent years, various reporting obligations have been imposed both by the OECD recommendation and EU directive. For example, that the EU DAC 6 mandates to report those cross-border tax arrangements, no matter whether the arrangement is justified according to the law. Also TRACE, concerning TRACE, treaty relief and compliance enhancement. Finland is one of the first to implement that procedure according to the OECD TRACE model. And also various other reporting obligations have been imposed on taxpayers and reporting agents to ensure proper taxation. However, as a result, reporting costs have increased and will continue to do so. So that applies not only income taxation, but also VAT, for example. And therefore, there is two fundamental issues should be taken into account to that reporting area. First, there must be a real need for that reporting, and this information must be used for somehow for securing that proper application of tax legislation. And second issue is that reporting complies with the principle of proportionality. So in other words, the reporting obligation are proportionate to the aim pursued. Also, some national legislation changes. Really shortly, we have had some national legislation changes concerning international taxation. For example, 2021, so starting this year, foreign corporate entities whose place of effective management management is in Finland are considered to be resident taxpayer in Finland and therefore are generally liable to pay taxes on a worldwide income. And prior to this change, the right to tax couldn't be formed on the basis of the effective management. This national change is in line with those main international practice and policy that the state of resident can be determined by the state of registration or that place of effective management. Obviously, tax treaties naturally can limit that taxation based on the national law. And overall, this national legislation change is likely to be small in Finland because that right to tax have probably been already existed on the basis that the foreign company have a permanent establishment in Finland. The last point that I would like to raise is that digital business. In Finland, national digital tax has not been introduced in Finland and no such introduction has been planned. Obviously, there have been discussion on this matter, but I think that Finland will await that EU and especially OECD proposal on that matter. The question of the taxation of digitality and digital business reminds me the sentence what Oliver Wendell Holmes Jr. has said, that taxes are the price we pay for civilization. So obviously we need tax revenues to secure our society as well as globally, but also within the states. But at the same time, however, we must remember to look these things also from the taxpayer's perspective. And despite these societal goals, taxation must also secure the right of an individual taxpayer to ensure that fair taxation. So it should be clear that those international tax solutions require common and uniform solutions in order to secure that both that societal goals, but also that right for the taxpayers. I think that I have used most of my time and thank you very much. I hope that you get some ideas on my thoughts. Thanks.
Thank you very much, Mika. That was excellent. And actually, you used your time perfectly in that. I have a quick question for you, which you may or may not have an answer for, so it doesn't matter. You mentioned obviously DAX 6, and you mentioned that Finland was one of the countries implemented first. Have there been any insights or knowledge in terms of what's been submitted and how it's changed, I guess, practice and how things have worked in Finland?
There is some guidance. Unfortunately, I haven't studied that well. The idea on that situation and the trace concern on that withholding tax and when the withholding tax will be taken and whether you will receive those benefits of the tax treaty. And there has been some discussion that in future more and more cases will go to the refund process. So you cannot receive those the tax percent of the tax treaty itself, but you have to apply that percent from the tax administration by applying those tax refund. That's the general discussion, but what we will see in future whether that is true or it is more like that people just be scared of that more and more cases will go to that refund process. Well, in Finland it is quite common normally that you will receive that right amount of that taxes at the same time when or the time of the payment. So you will receive those rights from the tax treaty, but I don't know. We will see whether that trace situation will change that in future.
I think exactly. No, I think someone once told me that too, that to what extent DAX 6 was just a deterrent in itself, right? But we don't know. Anyway, perfect. Thank you much for the excellent introduction for that.
Thank you.
Svetlana, do you want to go ahead and talk about Ukraine?
Absolutely. Good morning, colleagues. or good day. So thank you for having me today. What I'm gonna do, I'm gonna do a quick talk on three things. First, steps taken by Ukraine in recent couple of years. Second, what's next? And third, where is the focus and where is the pressure? Over recent couple of years, Ukraine was totally about anti-BEPS plan introduction and implementation into domestic laws. In 2020, Ukraine ratified multilateral instrument. Also last year, BEPS-inspired amendments to the tax code were passed through the Ukrainian parliament. And it is interesting that initially Ukraine committed to implement a so-called minimum package of BEPS measures, but we ended up with a much broader scope. And right now we have a variety of action points covered, including permanent establishment, transfer pricing, interest deduction limitations, various anti-avoidance provisions, mainly focusing on economic purpose test. Also, we've got rules on withholding on capital gains more strict now, especially when it comes to real estate rich companies. And we also have got our APA regulations implemented into domestic law. So more or less all BEPS or OECD inspired with some Ukrainian twist to it. What will come next? First, next year we will have CFC regulations introduced for the first time ever. And the rules are quite strict and they introduced on both corporate and individual level. Yeah, so like individuals will be the main target of the whole CFC regime and process. And this is a huge challenge for the Ukrainian businessman. This would require and would lead to a massive shift in how things are done. I think it's gonna change tax compliance and tax moral like we've never seen before. In addition to that, Ukraine kind of about to introduce the automatic exchange of information. Explicit terms and deadlines are not totally clear yet, but I'm thinking next year or maybe the year after next. So we're talking about quite a immediate time perspective here. And also, it's not a surprise that before going for CFC and automatic exchange of information introduction, Ukraine also considers voluntary disclosure program. And this voluntary disclosure program will happen either this year or next one. And it will be a mixture of tax amnesty and assets voluntary disclosure program, the parameters of which are being discussed very actively right now. In addition to that, we have some discussions regarding digital services taxation. Of course, the clear choice is either to try and follow OECD take on whatever, pillar 1, pillar 2, or go another route. So for the time being, Ukraine decided to start with the easiest pick, I would say, and Ukraine's take on digital services taxation will start with VAT. VAT applicable to services rendered by Google, Facebook, and other big players providing digital services with no presence in Ukraine. Later, maybe, depending on how OECD talks on pillars will progress, Ukraine might be open to consider some forms of direct taxation, but not now. So where does it leave us? Where is the focus? Where is the most pressure? I would say the pressure is on any type of offshore dealings. So any transactions, any payments involving non-residents, especially non-residents residing in low tax, famously notoriously dangerous jurisdiction are under huge policy pressure. I think that going forward, more focus will be on tax transparency and individual tax compliance. With all these CFC things, I think the tax planning will move more on planning on like individual tax residency things rather than another way around. I think generally Ukraine is now trying to get more involved in international financial infrastructure. Ukraine is opening up its like capital flow borders. We used to have very strict, unnecessary strict probably, capital flow restrictions and foreign exchange controls. Now these limitations and restrictions are being lifted, but this lifting comes at a price of a stricter anti-money laundering procedures. And it is interesting that now, in my view, tax planning and tax matters are not the one which lead or drive the discussion. I think it's mostly compliance and openness in general. It's more of whether you can prove the origin of your wealth, the origin of your funds, whether whether you can have your tax history explained to various independent third parties and so on. I think this is how the debate in the professional community and consulting services will be headed to next couple of years. I think this is all I wanted to cover. I think I did it quick, Sanjay.
No, it's perfect. In fact, we have 5 more minutes. So I'll ask questions. No, I'm just joking. But on this whole thing, what do you think is next? Because ultimately, the changes you've talked about are quite radical, right? In terms of how there's been a shock to these new things, right? Do you see it like plateauing, or do you see it going even further? Because obviously we have COVID, right? In reality, there's a question post-COVID as to how all of our countries will deal with deficits and everything else, right? What do you see? Obviously, you can't predict the future, but
I think Ukraine will be busy digesting all these initiatives that are right now at the table. And if Ukraine is able to digest 50% of that, it would change things dramatically. Talking post-COVID, of course the budget is stripped of money, so of course the audits will get tougher. Of course, regulations and attitudes will become tougher as well. So it will not be an easy time ahead of taxpayers, especially big ones, especially wealthy ones, if we're talking about individuals. So, yeah.
I think we'll all feel a similar context in that. But thank you very much for the very interesting talk on Ukraine. I definitely learned a lot. Valentin, do you want to go ahead with Bulgaria?
Hello. Thank you very much for this opportunity. I'll be talking about Bulgaria today. And Bulgaria participates in all global processes and takes part in them. So we follow the BEPS recommendations. We follow and introduce all the measures introduced by the European Commission. So I'll start with a short overview of what has happened in the last few years. So in 2017, Bulgaria introduced the mandatory country-by-country reporting obligations and notification requirements. As of January 1st, 2019, for the first time in Bulgaria, we introduced the CFC regime. So undistributed profits of low-taxed foreign subsidiaries and permanent establishments shall be included in the tax base of the Bulgarian controlling entity. it's subject to 10% corporate income tax. Certain exemptions apply, including in case that the profits of the controlled company are derived from a substantive economic activities, so they will be not subject to tax in Bulgaria. As of 2020, preparation and maintenance of transfer pricing documentation, justifying the arm's length principle and nature of related party transactions, became mandatory under certain conditions and provided that the companies meet certain thresholds. We also see that the tax authorities more and more focus on transfer pricing issues and more challenge the prices charged between related and even unrelated parties, since the requirement for arm's length applies also to non-related companies in Bulgaria and parties. As of 1st January 2020, we introduced also a new exit tax rules in accordance with the ATAD, the Anti-Tax Avoidance Directive. The exit tax covers the transfer of assets or activities outside of Bulgaria, but within the same enterprise, where Bulgaria ends up losing taxing rights on any subsequent disposal of the assets or the business. 1st of January 2020, we also introduced the rules against hybrid mismatches. According to the directive, Anti-Tax Avoidance Directive 2, there are also new rules concerning TIN capitalizations, and as of 2021, we have to comply also with all the reporting obligations under DAC 6. Companies, intermediaries, consultants shall report cross-border arrangements with, which involves at least one member state. For cross-border tax schemes introduced or initiated in the period 25th of June 2019, 30th of June 2020, the date was 2018, 30th of June 2020. The obligations for reporting passed on 28th of February 2021. By the end of January 2021, the intermediaries and companies had to report tax schemes implemented or introduced in the period 1st of July 2020, 31st of December 2020, and the first periodic reporting shall be done by 30th of April 2021 for schemes with standardized schemes. These are schemes which are ready to apply. At the moment, the tax policies in Bulgaria are mostly focused on increasing tax compliance and generation of tax revenues. And I would like to share my biggest concern looking at the process of what is happening at the moment globally and in Bulgaria. It looks like, but actually the regulatory burden of being compliant, it becomes immense and it's very expensive. It looks like the states, they abdicate from their main functions to apply the law and to control the taxpayers, and transfers more and more of these functions to the taxpayers, to all of us. It's like we become part of the tax authorities as we start working for them. And what bothers even more is, besides assigning all these obligations for reporting, for disclosing of information, all the subjects to these obligations are also endangered with huge liabilities. For example, not compliance with the country-by-country reporting obligation may lead to a penalty of up to 150,000 euro. Not preparing and maintaining local file, a transfer pricing file, the penalty is 0.5% of the total amount of the deals for which the company had to prepare documentation, but it did not. In the event of loans, the amount of the deal is the amount actually of the loan and not of the interest. In the case of DAC 6, if there is a favor to report a cross-border arrangement, then the penalty for the consultant could be up to 10,000 euro. 10,000 level, which is around 5,000 euro. What is also very bothersome that the scope of the subjects it's also broadened. It's not only the taxpayer, but also the manager could be held liable. It's also the consultant that could be liable. What is very bothering is also that these violations or the liability is engaged for very formal violations. For example, failure to report. There's no inspection or examination. What are the reasons for not reporting or for the late reporting? Is there any damage to the state or to the treasury done by this failure for this failure to report, for example? So especially now in during and post COVID-19 times, we see the tax authorities becoming a little bit aggressive with respect to collection of revenue. They apply all the instruments they have in order to collect more and more revenue, because we all know the budgets are empty. So what we see in Bulgaria is more and more tax audits, and they're not specific targets, but I think everyone would be affected. We had, I could say, from time to time we have certain waves. For example, last year there were a lot of tax audits aimed at individuals with bank accounts abroad. We have a lot of audits now at the moment going on with respect to transfer pricing, with respect to VAT, with respect to corporate income tax. So in this aspect, I think it's getting more and more difficult to be compliant in situations like that. I think that the main, Sanjay, that's the main scope.
No, you're right. No, I mean, as you say, this is, I guess, a new normal. You know, someone was once telling me a long time ago that he was, I think this guy is now in his 70s, okay? So when he was in his 30s or 40s, his partner at the time told him, you know, who was in his 70s, you know, regulation is getting too much, you know, it's too much. And he, think about it, this was, if you work backwards, this was in the 70s. So I think this is how the world goes, right? In terms of how we go, that we just have different things to focus on. And but we're definitely going through a normal. I think the changes we've had in the last 10 years, right, are probably much more than you had in the previous, I don't know, 10 or 20, right? So just the pace of change in all our lives, in everything we do is changing, right? So, but can I ask you a question? But has there been much outcome of, okay, there are these penalties, but they've been applied in your experience, or have you seen, like you mentioned these, or are these just now just things that are there to try to ensure compliance as much as possible? What do you think?
These are things. These are measures that are intended to ensure compliance. We haven't, I mean, seen some of these regulations or obligations are relatively new. We still have not seen that many cases of levying such penalties, but I'm sure in the future we'll struggle with it.
Right, exactly. I completely understand. I guess we just have to deal with it comes. But I think the good thing is we're all in the same boat, right? I guess is the point. In our senses. Yes. So I guess we can have more conversations.
If I can follow up your story about your colleague, I heard the same that actually the best tax planning nowadays might be the full tax compliance.
Yes, no, exactly. No, it's you make up. It's changed from, as they say, going to conferences. Now it's about, which is perhaps the correct thing. Now it's about advising your clients to comply, right? How do I comply, right? And that's it. I think that's just a new normal. But I agree with you that it's a new thing. It takes time to get used to. But as I say, but we're all in it. I don't think anyone here has said today that, oh no, my country is totally fine. I don't know what you're talking about. I think everyone here, if asked, I'm not going to, would understand. You know, it's just something we get used to.
But I'm still being a lawyer. I still try to justify how come and why, for example, consultants and intermediaries would be obliged to report on their clients.
Sure, no, and I'm sure someone is going to be taking EU case to this and having those discussions. I said I'm not an EU guy, but no, I fully understand what you've said is to be valid and is a view, but as I say, it's things we need to deal with, right?
Yes, and I understand that fiscal policy in the budget. I mean, this is a very important public. It's a public interest that need to be protected. But I'm sure there should be some borders, some limitations to it.
No. As I say, I think we're very early on in this reality, right? So I think in 20 years' time we'll have this conversation again, and then we'll look back. Okay, we'll all come back. Okay, we'll have this in 20 years on the 20th of March 2041. Who knows what technology? Maybe we'll have holograms. We don't know what we'll have, right? And then we'll see where we are. But I think we're at a brand new something, like when the US introduced the CFC rules, right, in the 50s, 60s, when they did, everyone was like, what are you doing? Now, how many people today mention that we all have CFC rules? And everyone's like, sure, go ahead, good. No one's even saying anything, right? But in the 50s, I'm sure when you had, I guess the Professor John Avery Jones, or the ones we look at, what would they have thought right at the time of what's this? So I think it's just a new normal, I guess. So I'm Sanjay here. So I'll talk about Singapore, I guess, in terms of what changes we've seen. I mean, on the whole, from a Singapore tax policy perspective, Singapore is always seen to be a good international citizen. It seeks to comply. It seeks to follow. As well as seeking to be business friendly, right? Because it's a very small country, only 640 square kilometers in total area. I think about 6 million population, probably nearly every big company in the world that even smaller ones, have an operation in Singapore. So it's very business friendly, but ultimately it's also understood that, hey, international norms are here and it has to comply. So every major thing you've seen, whether it's CBCR, having transfer pricing documentation, applying the MLI, automatic exchange information, everything has been followed and everything will be, right? And as well, Singapore participates in MAPs, it participates in APAs, it very much seeks to be helpful. Even in my day-to-day practice, the authorities are very helpful in terms of finding the correct situation. In fact, even in my experience of tax audit, it's probably different to all of you. The authorities are focused on getting the right answer. They're not focused on getting the most amount of revenue for them. They're focused in every person I've met is, what's the correct answer? What should be happening, right? So in a way, it matches up with the issue going forward. The only counterpoint is eventually, and even in the recent, I mentioned wealth tax to one of our colleagues, was in the recent Singapore budget, it was mentioned that going forward, Singapore may need to increase taxes, whether COVID or otherwise, right? And this point has been muted, and there have been various comments in the market about what this means. But I think there's a reality that every country faces about income inequality, maintaining deficits, thinking about the overall big picture that everyone talked about. And it's a question of what these measures will be. But what I do know is Singapore, very much the government thinks about everything in one go. They think, okay, how will it affect business? How will it affect the population? How will it affect everybody? And based on that, come to an answer after a lot of thought, after a lot of consultation. So we have, when a new thing comes in, there's often consultation with the market, where the big four, where the smaller firms, everyone comes and gives their view and focuses on getting the right answer. So I did everything, even in Singapore, which you wouldn't think have all these things in, I believe may come in what day, what shape, what form, I don't know. But I think it's just a new normal, as Valentin was mentioning in Bulgaria about changes. I similarly think that what will be there in 10, 20 year time in a small place like Singapore I'll be like, oh, I never expected this coming. So I think that's the general idea. But I don't see, in terms of, if you go to Gennady's topic, when he talked about competition, right? I don't see Singapore fighting. I see Singapore saying, okay, let's be fair, let's do things. But I see it mainly cooperating on the whole. And then, and that's mainly it. I mean, in terms of the future, I think we're all in a position of unknown, right? In all our countries and all our things, what we're going to face. And in reality, as Valentin said, it's all about compliance right now, right? making sure everyone's compliant, making sure we're following these rules, making sure we're doing the right thing. And as advisors, I'm not sure what proportion of this audience is advisors versus academics versus others, but I think the main focus, everyone here will agree, and I'm happy everyone to comment afterwards too, as you want to come in here. It's the main question is when you're dealing day to day is essentially what is the right thing, because with ultimate tax transparency, effectively you go with the assumption, as most of us have always done, of course, with there's transparency on the tables. If transparency is on the table, then ultimately it's, hey, what's the right answer? What's the fair answer? I think the biggest concern we have here is, will fairness be attributed in a bilateral sense, in a unilateral sense, right? Will it or not is the question, right? But I think if that's the case, the new normal will just be, hey, please ensure I get a fair outcome. Please ensure I get a reasonable outcome and follow within these rules. And then hopefully the pendulum will switch. One person gave me an analogy that in the past, if you had a pendulum between the taxpayer and the government, essentially it was all the way along the taxpayer side historically, or relatively recently. And what we're happening now is maybe dependent now. Some will say the pendulum's too far now towards the authorities. Some will say no, it's the middle, and that's where I think we're working out now. We're in a movement stage of this reality, right? We're now in the middle of the, I don't know, earthquake, you want to call it, like things are shuddering at the moment, and we don't know where things will stand. We don't know if things will work. And I think, especially with COVID, I think the next 10 years will have a lot of change in terms of various things. And I think ultimately, as I say, if we do this in 10 years time or 20 years time, topics we're now talking about will be just like, oh yeah, I have to do this, and the new people coming in. But yeah, did any of you have anything else further to add on anyone else has spoken, or any other things to comment in terms of the panel? Or you don't have to, just a question before I hand back to Irina or Victor to close up. I'm not sure if I'm meant to, but yeah, anyone have any other small comments to make here and there? I think the silence is, oh, perfect. Gennady, please go ahead. Sorry, please go ahead.
First of all, I think Mika asked a question about the position of Russia in mutual agreement procedures. So what we see here is that the number of cases is building up, but over the last year, not a single one has been resolved so far. So this is the statistics. Although the law has been passed and we now have it in the tax code, the details of how that should be working. So we do expect that there will be resolutions. The majority of those we understand are about individual tax residents. So that's the position that we're in. The group's been formed in the Ministry of Finance, and there will be some progress. We do expect that to occur. So that was my comment and the response to the question that Mika's asked. To your question, to your note, Sanjay, I would disagree that Singapore does not compete. It does, and all of us would confirm that those people who do work with clients, you do have people set up in Singapore coming to our clients and saying, "Hey, come here, and we have a very stable tax system. Opening a fund in Singapore is really good, and it works, and it's very understandable." And you told us in the beginning of your speech about how Singapore competes. You were saying that if the tax authorities, they come, they don't really push you, they don't want more revenue, they're all friendly, and da 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 da. That's competition to me. Okay, so this is how I view it. And yes, Singapore cooperates, but at the same time it does compete. That's the point that I'm making. I'm not saying that a country does either this or that. I'm saying that each country is doing both. Okay, when they talk to each other officially, they cooperate. Then they go back home and they think of how best to compete. And that's very natural. I'm not saying it's bad. I'm just saying that it is checks and balances. And this is why our profession will continue to exist until we've reached singularity, as I said, and until we've got some aliens coming in and saying, okay, we've got our own tax systems here, and we want to levy some alien taxation here. And then the world will probably come along and say, okay, let's create our own one Earth including solar system, tax system, and fight the aliens. So that day will come one day.
No, by the way, I completely agree with you, Gennady. In terms of what you've just said, I think it's competition, the differences, but I completely agree, right? And in a way, then we'll have funny treaties, right? So the treaties between planets, right? It'll get very complicated in this whole thing. You'll have, what is it? City tax, state tax, country tax, and then planet tax. No, it's crazy. No, you're right. But no, I definitely think you're right in terms of there is competition, but the ultimate question is, isn't it reasonable for it to be there as long as everyone can agree what to allocate, like from taxpayers' perspective, but ultimately, if we agree on, okay, there is competition does exist, we can agree on who should get what, and everyone agrees, then ultimately there isn't a problem. Is the question. I don't know. The same. That's the question, I guess. But yeah, cool. Oh, Mika, I think you wanted to speak. Is that right? No?
Yeah, thank you very much, and thank you, generally, those comments on Russian's perspective on that map statistics. Yeah, it is interesting to see those statistics and maybe make some conclusion on those. Of course, we don't know everything, what kind of cases there are, and etc. I was quickly checking and browsing those statistics from some other countries, like Ukraine have 0 cases at the end of 2019, Bulgaria have 11, Russia have 30, Singapore have 34, and Finland have that 97. So is the Finland the most problematic country? I don't know, but comparing those big countries like Germany, there is open cases at the end of 2019 over 1,000. Same goes with USA, around 1,000, and India around 1,000 open cases at the end of 2019. So it is really important not only check and watch those cases, how many cases there are, but also that how many cases are closed, and whether that map procedure is working or not, because that's the one way to avoid that double taxation and taxation taxation that is not that doesn't follow those tax regulations. So I think it's interesting to check those statistics, and if anyone still have some comments on from the other countries too, it would be interesting to hear. Thank you.
Perfect. Thanks very much for that, Mika. So were there any further comments from the panel? If I assume no, then thank you very much for watching this event. Hopefully you found it enjoyable. Obviously, please leave comments. I believe we're on YouTube. If you have any comments on that you'd like us to follow up on, or I'm sure we'll be keen to do so, or please contact the organizers as well, and I'm sure we're pleased to be able to answer any questions you may have offline. Otherwise, I want to thank the panel. Thank you, Gennady. Vladimir Tianlong obviously has gone to bed. Mika, Svetlana, and Valentin. And I pass you over to our leader, Irina. Take care.
Okay. So thank you very much for this panel. So I would like personally to say thank you to all of you. It was really interesting to know what is happening in all your countries. And I hope that we shall meet in future, not once. And thanks to Victor, who put so much enthusiasm to make our conference happen. And I also would like to say thank you to Deloitte and personally to Gennady Kamyshnikov, who technically support our conference, our session. So I wish all of you be healthy. First of all, this is the main thing that we have to wish to all of us. And if we are healthy, and we shall have the opportunity to meet and to discuss and have interesting discussions, I'm sure. Thank you, our leader and moderator of this session. Thank you very much, and see you then.